What is up, YouTube, and welcome back to another Fridge Financials video. In today's video, we are breaking down a couple updates in the portfolio. I'm going to show you guys two trades that I have here that we're looking at. Actually, three trades. Two poor man's covered calls, one synthetic long that's also a covered call. So if you are excited for today's video or curious to see what we're looking at here, make sure that you like the video, subscribe to the channel, and as always, turn on the bell notifications for all future uploads. First stock that we are looking at is SESAI, which had a killer day so far, up 17.77%, absolutely unbelievable value. We did, in fact, go ahead and buy a $1 call option for January 21st of 2028. So we're looking at way down the road. Again, with the AI hype and everything else, they are a company that focuses on rechargeable battery technology. They have some very good patents that are in play right now, or they're trying to get through. And a lot of hype behind the stock, a lot of momentum. So I figured I'd buy a LEAP option. Now, this option is already up $13, about 9.29%. But what I want to show you guys is this would be an example of a stock that you'd want to get into where you could potentially do a poor man's covered call. Now, how a poor man's covered call works is that you buy a LEAP option, like I have one right here for SESAI, which is a $1 option for January 21st of 2028. And the job would be to sell a shorter term covered call to essentially give yourself some income as the stock does whatever it wants to do. So what we can show you guys here is the profit breakdown here. Essentially starting, and I went all the way out to January 21st and I bought this $1 call option here with a delta of 90. Basically, every single dollar that it moves essentially is going to be a dollar in the delta as well here. So it's a very deep in the money LEAP option that we have in this case here. Is it a little bit more on the expensive side? Sure, because again, you can just buy the 100 shares instead, which could be the case in this case actually. But at the end of the day, if you wanted to see how a poor man's cover call would really work out in this case, what you would then do is say, okay, you know what? I'm going to go to October 17th maybe. Or maybe we can go even farther. We'll go to November 21st as an example here. And I want to sell a covered call. Basically, this strike price here, if SESAI goes to $3 by November 21st, then I would have to then close this position because this needs to have 100 shares of something, and that LEAP option I have bought would count as the collateral. Now, when you sell this option here, it actually creates a nice little chart here and shows you that your maximum cost is $130. Actually, mine is a little bit less because, again, I'm already up $13, so my cost actually be $117. And my max profit be if it hit $3. And what you're looking at here, crazy enough, is that if it hits $3, which is a 44% return in terms of the stock appreciation between now and November 21st, I would basically almost make 100% gains, which to me is absolutely unbelievable that we're looking at right now. So basically giving myself a lot of time on the LEAP option here. But in the short term, if it goes to $3, great. I get exercised, and then as a result of it, I close the entire position before that whole thing gets exercised anyways, and I make some really good profits. Again, making almost, 100% return in a little over a month would be absolutely amazing. So again, it has to go up quite a bit, obviously, so it's very unlikely, but it is something that is possible with these kind of penny stocks as there's a lot of momentum and hype behind the AI section of it here. The next one that I did this for is actually a company that's been around for many years, and that is Wendy's. So what you'll see here is I already have basically a poor man's cover call open here. I bought a $7 call option here, and then I sold a $10 call option for the shorter term here. So if you want to look at how that trade looks, take a look at the chart here. So I basically went out and I bought a $7 strike price for Wendy's here for $320. Now, why would I do that? Well, instead of paying $700 for it, I only pay $320 for the equivalence, which again is a little bit more, less than half of what it would actually cost. Then I went out to the short term, and I believe, make sure I got this one right here. I went out to November 21st, and I sold a $10 call option here. So again, my cost basis originally $320. Then I sell a shorter term covered call basis to offset the LEAP option, which would be $43. So it offsets my cost basis by a little bit. Now, if Wendy's goes up to $10 by November 21st, I would have made $87 here as a maximum profit, and it costed me $277 here. So you're looking at almost a 33% return ROI in just over 1 month. Another good position, potentially. This would be a slower moving stock that you would see here because Wendy's, as we know, is a company that has been absolutely slaughtered in the markets. Again, it is down 42% almost year to date. On the 1 year, it is down 45. On the 5 year, it is down 55. But again, they're a company with a very, very low PE ratio, and they're a fast food chain that I do not see going anywhere no matter what. They're always coming out with new items, new things on the menu and stuff like that. So I figured, you know what, let's try to throw in some money towards Wendy's and see what happens here. Now, right now, obviously, it's down about $8 right now. But again, what's going to happen with this position here is that if Wendy's doesn't go to $10 by November 21st, then this $43 I got paid here is going to offset my cost basis of what I paid for this one here. Let me take a look and see here. It's actually $35 was the sold option and $320 in this case. So if Wendy's doesn't go to $10 by November 21st, then what would basically happen is that this $35 will then basically be offsetting my $320, bringing my cost basis down to about $285. Then we can do it again and again, and we can keep on doing it to kind of pay down this leap option, essentially. That's kind of what the hope is that we're looking at the time of recording this. It has till January of 2028. So we're looking at, over 2 years. So plenty of time for Wendy's to hopefully rebound back. And you know what? If it goes $10 by November 21st, great. I can close it out for a nice and tasty profit. So that's how a leap option works with a covered call. Now, it is something that's very important to know that it is going to be capping your upside potential, right? So if you take a look back at the trade that I built there, so take a look back at what we've got here. So I bought this one, then we sold a shorter term one. Basically, it does cap the potential profit that you have here. Instead of having an unlimited upside potential for profit here, you actually have a max profit of $87. But it allows me to close out for about 30% ROI, which is amazing, and then get in and out of the trade, call it a day, bing, bang, boom, we're done, we move on, and that's really about it, which to me, I think is very, very nice, because you don't know what's going to happen. This market is in some crazy, weird space right now for us overall. We have the government shutdown, we have jobs market is awful, but we have rate cuts coming to try to help ease that, but then that could push up inflation, so we are at all-time highs. Who knows what's going to happen here? So having this kind of trade where it could close out in the next month or so for some good profit isn't too bad. All right. Now, we can do the same thing, but I'll show you an example of what I did also with a synthetic long cover call, and that is Plug Power. Plug Power has gone up 34% so far, which is absolutely unbelievable. But my actual ROI right now is about 70%. So what you will see here is a 3-leg option strategy. So if I go to trade plug options here, let's break down how this trade is going to work. So I believe, make sure I get the dates right for these ones here. So I did a synthetic long for March 20th at $2, and then I sold a $350 for that one. Okay, so March 20th here. So basically what I did is I bought a deep in the money call option with a 90 delta, basically, which means that, it's almost 1 for 1 actually now. But I bought this at a little bit of a cheaper price here. And then what I also did was I sold a put at the same strike and the same expiration. That creates a delta of 1. It's called a synthetic long position. It looks just like what you would have when the stock moves. If the stock goes up 5%, my option is now going to go up 5% as a result. So on, and so forth. Okay. So this creates what's called a synthetic long. Now, what's the point of this? Well, it gives me access to $200 worth of the stock for a discount of $173, which to me, a discount isn't too bad. What also will happen here is that if Plug Power goes down to $2, I would be forced to buy the shares because it's a cash secured put as well. Now, in taking a look at this trade that we have here right now, again, it's nowhere close to that, so we're in a pretty good spot right now. Now, what I also then do with a synthetic long is that since I still have this leap option that is bought, I then go out and sell a shorter dated covered call. Basically, a poor man's covered call, but not as, I won't say sufficient, but it's a little bit more advanced because you have a synthetic long with a cover call here. And what you will see here is that I'm actually already in the money here because it went up 38%, which is absolutely wild. But if you take a look at the potential profit here, this one right now would be $45 in profit, and it cost me $97. Now, if we go back to the actual trade, it actually costed me a little bit less. The cost here was actually a little bit better. So let's take a look at what we've got here. So going into the options here. So I sold a put option for $2. And what I'm doing with my synthetic longs here is that I'm doing them separate. So that way, if I want to roll this down further or roll this up higher, I can do so as a result. Okay. If you have it as a 2 option at the same time, Robinhood doesn't let you roll it. I don't know why, but it just doesn't. So I bought this $2 call option for $117. I then sold a call option for our cash care put for $37. So this trade initially costed me $80. Plus, I also got paid $23 as a result of this covered call, which gives me a total of about $57 for a cost basis. So my cost basis on this trade actually was $57. And what you will see with Plug Power is that I'm already up almost 100% overall. That's amazing. So I've actually made 70% on this trade in a matter of a couple days. Now, could I have said this earlier? Of course, but here's me opening up the trade here on October 2nd. It's now October 4th. This closed October 3rd so far. So is it going to keep running next week? Potentially. Maybe it does, maybe it doesn't. And if it does, then we can manage our trade from there. But the synthetic long that we have here is going to create more value than this cover call here. And at any point now I'm comfortable to sit there and say, whenever I feel like it, I'm ready to close the position out here, make some good money, and then move on to the next trade here. I didn't expect Plug Power to take off like this, but it got a really good upgrade recently to about $7 per share. So it could still run up a little bit. But if it does, again, I can just close the entire position out here, make some really good money, and then move on from there. So that is called a synthetic long with a covered call. And then we also have leap options with poor man's covered calls as well. So as you can see by the portfolio, we had an actually really good week in the market here. We got a huge skyrocket. I think we're up about like 3% on the day here because a lot of my options did very, very well. And we are now close to $13,000 again. Obviously, year to date, we are still sitting pretty low, down $4,000 here. But going back from the lows of Liberation Day, down about $9,000, all the way back up to about $13,000 means we've done some really good trades overall as a result of it. A lot of trades that are happening over here that you can see. Sweet Green, I am waiting to kind of see what's going on with this one. This one is also a synthetic long that we have. Again, right now I'm down about $30 so far, so I'm not really quite sure if I want to do a cover call on this just yet, but basically sold a cash secured put, bought a leap option here for 2027. And again, if I wanted to make some passive income in the short term, say I want to go till October 31st, you want to sell an option for say $9.50 or for $10. And if you wanted to build this one from scratch, we definitely can. Okay, so if I've sold a put here, I can show you what the whole price profit breakdown will be. Here's my synthetic long that I made here. And then if you wanted to get into this trade here and go to say maybe, October 31st, a $9 option here. The cost basis is about $3 or $300 right here. And my profit's about $121. So again, about a 30% return if Sweet Green goes up 8% in a matter of about a month. And again, it's a momentum stock play. It had some really bad, earnings recently, and now hopefully looking for some support here. But so it's a good play to look at maybe for the long term. The delta here is about 0.40. So it's actually not a bad chance of this going to $9 here. But again, if it went to $9, you'd make over 33% in about a month. Right. And even if you didn't want to go that, say you want to go even further. So you want to go to November 14th, you want to go to $9.50 here. That's even better profit here. Looking at $192. on 287 for a cost basis. And again, that delta is about 40%, which means you're giving yourself a pretty decent chance to get exercised here, and you can close the entire position out for a profit. So that is a very, very nice trade. I also did want to do it with a meme stock here. I made a whole video about meme stocks, stuff like that. I did it with Blend Labs as well. What you will see here is Blend Labs, we did a $3 call, $3 put, hoping to get some momentum play behind it. Right now it's at about $3.50 or so. And then we sold a covered call as a result. So again, if you want to take a look and see how that one was built, we can kind of show you that one. So here's me buying the call option. Here's me selling the put option. And then I believe I had it for, let me take a look here. Was it November 21st? Sold a $4 call option here. And again, take a look. This cost basis right now is about $12. And your return is about $89. So if Blend Labs somehow finds some momentum behind it, like the Open Door, like the Loan Depots, this is kind of a similar boat for this one. If Blend Labs, which this delta is about 0.40, so it's not too bad. If Blend Labs goes to $4 between now and November, you would pay $12 for this trade, and you'd make almost $90 for a $12 trade. Now, if you're going to sit there and say, well, Fridge, why would I do that? Or it's so risky and stuff like that. And again, what would be happening here is that you also have to put up, some money for collateral and stuff like that. Okay. But these kind of keep in mind about is that your max loss is actually $306 here, because if it goes to zero from the exercise put option, you have to pay all that money, obviously. But the good thing is that when you're selling cash secured puts, if you have margin enabled, it uses Robinhood's margin to give to you. Here's the cash in my account, but this margin is being used as options collateral. So I'm using Robinhood's money to create synthetic longs, and the synthetic longs I'm then able to also sell covered calls against, and I'm able to use that to hopefully make more and more profit. So that's what I've been looking at so far, and it's been doing pretty okay. Kenview, as another example here that we're looking at, I have two options right now for this one at $4.40 each, down about $60 right now. But if I wanted to, Kenview, these are leap options for 2028 here. If I really wanted to, I could go to, say, maybe I go to November 21st. I could sell a couple call options here, and I'll be good to go. For example, let's build it out, right? Because, it doesn't hurt to see these different positions. This is me being fully transparent about what is going on. These are leap options that we have right here. I know I've kind of gone on a little bit of a ramble here, but hopefully you still enjoy the transparency. But say you have this $50 call option. It's going to cost you $400 here. Say you sell a $16.50 here. And let's see what we've got. Oh, I sold both of them by accident. Whoops. Let me do this. I gotta buy that option. Sorry about that, everybody. We're gonna buy the option here. Then we're gonna sell a shorter term, say November 21st call option here. Say we sell it for $17 or so. You still make, if it hits $17, you make $158 on 334. You're looking at almost a 50% ROI on Kenview. Say you want to go to $18 here. If it was to $18, which is a huge move, but it had a big swing to the downside, so it could possibly have a rebound at some point to the upside here. If Kenview goes to $18 between now and November 21st, you make $200 about on 355, over 50% ROI on these trades. Another one I wanted to get into, but I'm waiting for a pullback, is Rich Tech Robotics. Rich Tech Robotics has been on a moonshot recently, and I've been waiting to get in, but it just keeps running and running and running here. But say I wanted to be super bullish on Rich Tech Robotics, I would say, I don't have any options here just yet. Let's see, do we have any kind of options? Let's see. Here we go, March 20th, 2026, right? So say I'm really bullish on Rich Tech Robotics. Say I want to buy the $4, maybe the $5. I don't know. Let's take a look and see what the options are. So say you want to buy a $5 call option here, pretty good delta, and I want to sell the $5 put as well. Again, the call option and the put option that's sold offsets the cost basis for the call option. Cost me a $127 cost basis. And again, if it goes to zero, I'm down more because of the exercising of the cash secured put. But then let's say short term, let's bet that Rich Tech Robotics doesn't go to, say, I don't even know, man. You could probably put it at to a crazy premium here. Let's say let's go even to the end of October. Let's go to spooky season. Do we have any options here? Not really. November 7th. Okay, so the 7th is a little bit better-ish. Let's go to, let's say a 750 call option here. Okay. Cost basis $37, max profit 220. You're looking at a 7x return potential here. And again, if it goes not to $7.50 between now and November, I would just do it again for the next month and for the next month. And it's going to offset this cost basis of $127. And when you go to review this here and you want to get this contract, the market is closed right now, 128, for example. You're going to review order it. You're going to have collateral $500. That collateral is coming from my Robinhood margin. It's not coming out of my cash. It comes from they pull it out of the margin. Instead, they put it into here as collateral, which is great because I'm using their money to then get into the trade here. As Rich Tech Robotics hopefully still has momentum behind it, it pumps up, we make some good money, and then we're all set and good to go. So that is basically some updates on the positions, a couple poor man's cover calls, a couple synthetic longs here, a stock on the watch list still as well, but some crazy good returns we can potentially have. Again, Plug Power, we are already up a lot of money right now, which to me is absolutely amazing. You'll see it probably close out Plug Power probably within the next week, take that profit out really quick, and then move on to the next trade. So thank you guys so much for watching today's video. If you made this far in the video, as always, make sure you like the video, subscribe to the channel, and as always, turn on the bell notifications for all future uploads. Hope you're making money in the market in some way, shape, or form. And as always, I will catch you guys in the next video.